Hello, friends. It's Peace, Love, Music here with our good friend Crypto Landy coming to teach us more about how to do TA. How are you, Landy?
Helps if I unmute my mic, right? I'm doing well, my friend. Just over here, taking care of a few things in the background as we're going to try something a little new today. But, today we're going to talk about the breakout. We're going to analyze the breakout utilizing all of the different core technical analysis fundamentals that we've been talking about this entire time, in particular, the first four live streams that we did. First one being, of course, the trend live stream, the support and resistance, the second one, the volatility being the third one, and the fourth one with momentum. We're going to take and utilize all four of those again this week, like we did last week, where we kind of walked through all of it as one. Well, we're going to do that again. We're going to analyze this breakout to new highs on Bitcoin. And we're going to have a little bit of fun with that and maybe a little bit of Q&A if this goes the right way. We'll see how this actually goes, but it should be interesting to say the least.
Right on, right on. We're always trying new stuff here, and I do think that once we might have to try this a few times before we get it down. But I do think that the idea of incorporating both mediums at the same time is interesting, to say the least.
Yeah, it should be interesting. As I'm sharing out two things: the Spaces event and the live stream right now in the background here. So
so you're double spamming everybody right now.
Oh, I'm getting everybody. Everybody's going to be very, very angry with Landy. So I'm going to actually unmute this space right now, and I'm going to pin up in the Spaces event. So nobody on stream in the live stream right now actually knows about the Spaces event. We'll get that link shared out to you in just a moment. But I'm going to be getting the deorganized media pinned up in the top. Now, for those that are joining both, are you in there as well?
Yeah.
I was going to say, for those that are in the Spaces event or in the live stream event, you can actually have a live stream event and a Spaces event open at the same time, but I would suggest two different tabs and mute one of them. Okay. What I'm going to do is I'm just going to be hosting the Spaces event, and in the background here, people will be able to hear me in the Spaces event. Of course, I hope you're watching the live stream as we break down the charts. I actually just got a message piece that somebody says that the background music is a little high.
I will put that down right now.
But what you can do is watch the live stream. If you're in the Spaces event, you'd be hearing double. Go ahead and mute the Spaces event, but hang out, because what I'm going to do is I will open up the stage to questions in a little bit, and you can come up and ask your TA questions, and then mute yourself, mute the space, and watch the actual live stream. And what I will do is I will explain what the question was, and then I'll go through answering that on the live stream. And should be interesting. So for those that are joining in the Spaces event right now, you can go ahead and follow the pinned tweet to the top there. That is DeOrganized Media. That is the actual live stream.
Cool. That's great stuff.
Yeah, it should be fun and interesting. Now, it would be helpful if Landy over here actually shared the event that we're in himself here. How about I share it to my profile as well? We're live, says the Landy. Yeah, so how are we looking on numbers? We have a decent amount joining up now.
Well, I'm looking at we have 30, which is kind of slow, but it's actually been slow the last week. Anyway, the last 2 weeks really has been a little slow. I think just end of the year, there's a lot of other stuff going on, but it's picking up. 35, it's they're trickling in.
Yeah, so we'll give them another moment here to kind of come in. For those that are in the Spaces event, please go ahead and like and share the post above. Get people into that live stream. And Peace, what I'm going to do, actually, you're in the the event, if you want to post the link to the Spaces event in the live stream chat, I'm going to jump in there as well real quick.
I have already done so, and it's actually on the.
Oh, very, very cool.
Yeah, I accidentally shared the studio link. Somehow
hey, everybody come on into the studio.
So if you guys want to come on and chat live, you can do that too.
Yeah, you're more than welcome. Definitely won't get any trolls.
No, I would love that actually. Maybe we should start. Maybe that's a thing.
Just not open it up.
Yeah, maybe that's a thing just to experiment with. Just kind of start going live like Spaces where anyone can join. We start putting the link out there.
Yeah. Exactly. So again, for the people in the Spaces event, this is going to be for Q&A for the live stream that is posted above in the Nest or the big board. What do we call it? I don't even know what to call this.
People call it the Jumbotron, the Nest,
the Nest, the Petri dish, whatever you'd like to call it. We're in the live stream. You'll be able to see myself as a puking frog. And of course, the wonderful Peace Love music. We will be sharing a chart here in just a moment, but we're waiting on some more people to come on in and start to get to breaking down this move. We're going to be covering all of the different areas of technical analysis, the 4 keys, trend, support and resistance, volatility and momentum, to kind of keep hammering in some practical use of what I've been teaching or what I've taught in the first 4 live streams, where we're going to start kind of defining that criteria, really honing in, and then we're going to open up the Spaces event for questions where you can come up on stage, and I'll manage that on my end while Peace is managing the live stream over here. This is an experiment, and I hope it becomes a beautiful disaster. So help me make that possible by sharing the live stream above, and you're more than welcome to share out the Spaces event down below. Peace, let's go ahead and get a chart up on screen. People want to see this price action.
Yeah, we definitely want to take a look at this. What a couple of days it's been, huh?
GP, I'll bring you up when we're ready for questions, bud. I gotta have just no beeps or blips or anything in the background for right now. Landy's attention is split. No offense, buddy. I love you to death.
You should make GP a co-host actually, and let him manage the space a little bit.
Okay. You know what? That's a good idea. GP, I am going to bring you up. You're a co-host now. Hi, buddy. I got you, bud. Actually, that's a good idea. So you're now a co-host. Have fun with that, GP. You manage the space. He's like, what did I just walk into? What the hell's going on?
That's perfect. He's great for it.
You know, I love you, GP. But yeah, well, it would be nice if see, he sent a request and then I sent him a co-host request. So now he's just stuck on request. So that's how this works. Beautiful already. Hey, you have a DOM right over your face, Peace.
I know, but then I can.
This is already awesome. I love this. After I got to go back and watch this morning space. Where'd GP go? No, don't leave, GP.
Oh, he's probably just taking a walk, taking a lap.
Okay, there you are, Peace. Hey, Peace, do you notice something about our chart? It looks as though we're starting to do something that I've been talking about.
Oh, expansion to the upside.
Yeah. We're in expansion to the upside. See, this is something where I want everybody to start testing their knowledge. And Landy, as the amateur teacher, well, believe it or not, at one point in my career, I was a teacher, but I'll be quizzing Peace. So everybody make sure that you're keeping Peace on his toes as well. But I'm going to be quizzing Peace because he's right in front of me. I see his beautiful face. And what we have now seen is something that we've talked about previously, and that is the compression to expansion. We have confirmed expansion. We've met the criteria that we talked about, not just in my videos, but in last week's actual live stream. You know, we covered the compression here. So we were right around the low side structure here, Tuesday the 10th, right? I talked about the criteria. What's up, Reese? talked about the criteria for expansion to the downside, and I talked about criteria for expansion to the upside. And you may remember I said if Bitcoin is going to kick off expansion to the upside, we have to see it close above the upper second standard deviation, but it also needs to meet additional criteria. One piece of additional criteria in this case, and that is not just closing above the upper second, which would kick off a higher volatility environment or expansive environment, but we need to see a close confirmation above $104,000 to actually get the real expansion up. And you might remember I talked about 100, above 104, we're kind of looking at like 106 and then 106 to 108. Take it like 2K at a time, 108 to 110, 110 to 112, yada, yada, yada. Well, we have seen that move. We saw a move to 106 in yesterday's, almost 108. We have now seen 108 officially hit, 108.388. And in this case, we had a Fibonacci level. Now, this was when I talked about Fibonacci, it's based on Fibonacci math. And many might think of that as the spiral, right? The Fibonacci spirals. Well, in this case, we're using percentages for Fibonacci's. And you have 100% to 0%, right? And you can customize the range that you're pulling a Fibonacci from. And we can just use this structure that Bitcoin was exiting out of on its expansion on the weekly, right? So we closed above the prior all-time high. We had the nice compression when we got the close above the upper second standard and upper third, while closing above the prior all-time high. And that initiated the expansive move up here. Well, if we were to take the percentage zone between the high at 73,835 and the low there at the $49,000 wick, which by the way spiked the ETF highs over here, we get basically percentage zones of interest within this structure, right? So we have the 100% to the 0% in this case. And, we have a 50% of the structure was at 60,180. So that is splitting the difference between the high and the low. And then we've got Fibonacci numbers and some custom numbers here that in general will be Fibonacci numbers, but don't always have to be. Some people like to put 75%. Some people like to put 80%. I stick to the fibs with a few added numbers like the 888, the 0272. A lot of use a 234 and like all this other stuff. So in this case, these are percentages. So the 19% down here, the 27%, the 38%, the 50%, the 61.8%, the 78.6%, the 88.8%, the 100%, right? So you can just think of it as percentages. And then we have extensions. And that is above the 100%, we're looking at, 16.8% above the high here is $80,000 essentially, right? And that's called the 1.168. Now, this is not a standard fib that you're going to see. This is a custom that Landy likes, but you don't have to use it. I like it. We have the 1272, which is 27.2% of the 100%. So it's an extension of 27.2% above the 73,835. That was at 82.5. We have the 1414, which is 41.4% above the 100%. We've got the 1618 at 95,000, which is 61.8% above the 100%. So these are just extensions, and you can keep going with this, or I can keep going with this. And we've got the 1786, which is 78.6, the 888, which is 88.8% above the 100 at 73,835, and then we got the 200%, which is double this entire structure in terms of its size. And if you were to math it out, you would get the exact amount of this move is the exact amount between the 1 and the 2 spot extension. So that's up at 111,145. So, we had an area of interest there that we had been talking about on any closes above the 1786. We kind of talked about this last week at 101,800. Any closes above 106. We were talking about basically, I was saying 106 to 108, take it like 2K at a time in the lower term timeframes, 108 to 110, and then 110 to 112, which would put price right around this 2-spot extension up here, or 200% extension, which is really just 100% above 73,835. So it's also known as a 1x. For those that like to do like, this coin's going to go 1 to 2x. It's going to do a 10x. It's going to do 100x, 1000x, and all that stuff. So in this case, we can see on the weekly, Bitcoin is around its upper second standard deviation because it's been in expansion to the upside on the weekly. The upper second standard deviation, if Bitcoin continues up, is likely going to be somewhere around that 2 spot, somewhere around the 110 to 112 zone. Maybe a little shy of that if it doesn't hit it this week. It definitely will keep continuing up into that area of interest overhead. But if we were to take trend, if we're going to start out with trend, which you can see here on the daily, now that we have some context for the weekly, we had this nice compression, and then we met the criteria of closing above the upper second, kicking off expansion. And we also met the criteria of closing above the prior all-time high at $104,000. So what was the trend? That's only the volatility piece. Well, the trend was an uptrend. And in this case, we can throw on a swing indicator. You don't need a swing indicator, but this is just for visual reference. If we turn off the actual the Bollinger Bands there, we have a bit of a swing indicator, and I'm actually going to disagree with this. This is why I don't like a lot of tools, but we can see that we had higher lows, higher high, higher low, higher high, higher low, and a little bit of a lower high on a swing basis. Never confirmed it on a close, by the way, but on a swing basis, lower high to a higher low, higher high, and in that same structure, we had a lower low to a lower high, higher low, and then higher high. Now, if we were to take that swing structure and kind of break that down into candle closing structure, what does it look like? For the way that Landy would advise that you kind of read this. Now we're going to start at kind of a point. We're not going to draw out the full structure, but we'll start at this higher low down here before the move up. So we don't have a closing high here. We do have a nice swing high to a swing low between the green and the red candle. But in this case, the actual high is up here. And then we have a closing higher low. So both a swing low and a closing low being set. You can see the green candle closed above the red candle's wick high here. We did not get a closing high right here. So believe it or not, we got a swing high to a swing higher low close. We didn't get the closing high there, but we do have to mark it because there is a higher low close here. You can see the red candle, the little doji green candle on the bottom there with the low. And then we had a green candle close above. So we have a closing higher low from swing high to swing higher low structure. We never got a closing high set. We did get a swing high confirmed though. We swing up to this area here to make the higher high at $104,000. And then we get another closing higher low. And this was a nice 3-candle structure. And in this case, we had the red candle followed by another red candle, which was another doji or a spinning top or whatever you want to call it. And then we got the green candle that closed above both of those red candles. Specifically, the closing higher low was confirmed, although I always like to see it close above the open of the first red candle. In this case, it was closing above the high of the doji candle there, which was what it needed to do to set not just the swing low here, but also the closing low. We saw that, and then off to the races to the upside here. So what we really have is a nice uptrending structure. So yes, I'm ignoring this swing low. Why am I ignoring this swing low? Because I'm looking at the closes here. And why did I pick this swing high, but picked this swing low? Because we didn't actually close this high until later and went right into higher low structure. So this is where you do have to use some discernment when you get into evaluating structure for a close, and count based on what you see for the actual closing structures next to each other. So for instance, we have a closing high over here, right? We have the move up from consolidation to the move down. So we closed below, and in this case, we're just going to hide this for just a moment and kind of zoom into this structure real quick here. hide for just a second here. So we're going to zoom into this structure here. Once we saw a close below this this actual wick low, we had the close in. The other area to make sure it's fully confirmed would be the open of the first candle here. And we see the giant red candle closes below all of it, not only locking in the high, locking in the closing high, but definitely confirming that by closing below that green candle's open, right? So that's a high. And then we have, on the other side of that, we have a higher low structure. And this is where, we still get the confirmation on the other side. We get the bear candle, we get the close above the bear candle high, thus setting the swing low, and the higher low close there, or the low on a close. Now, what I like to see is I like to see closes back above the open of that candle to, just really make sure that we're moving price to the upside so that we're in our higher high, higher low structure. We actually didn't get that. We got a swing high, and you see where it rejected. It actually rejected around that candle open right there. And this is where we got a swing high, right? That was put in, and we needed to see closes below realistically this open, because the candles were we never got a close below the actual green candle low. So you see we have a red candle low, we have a green candle low, and we never got a close below the green candle low. We did below the red. So everybody's probably like, well, why isn't it a closing high then? Because it closed below the bearish candle. Isn't that the criteria? No. When you start to get signals like this with two candles next to each other, red, green in this case, we want to see the open or this green candle, wherever the low is. We want to see that close below if it hasn't closed below the actual open of the green candle here. And we never got that. So if you look at how close this was, it's literally right on top of each other. So we can see that the red candle never closed below the actual green candle's low, because we got a red candle here, the green candle didn't close below. What this candle did, this red candle that failed to close below this green candle and the open of the other green candle before it, when it failed to close above there, all it did was set the swing high. All right, it never set the actual closing high, so it never fulfilled the criteria for the way that I read candles to set the closing high. And this is where a lot of people would have gotten mixed up. So this was simply a swing high. And we never saw the close below here. And look at this area, by the way. Just note what's happening with the price action around here, where this candle open came in for this bull candle at 95.665 in this case. We see that it was wick below or swung below. We see that we got another candle that swung below. And this is where we went from swing high to closing higher low. So if we look here, we have the candle high here for the green candle. We have the red candles open up here. And Bitcoin swung below, popped above, confirmed this as a swing low. And when closing it back above this candle here, it actually closed the higher low structure. And of course, in the very next candle, on the next day, it had a very volatile move and actually set a much lower low swing, with a much higher high swing. And realistically, there's some tips I'm going to give you about this kind of a candle structure. But we ended up just moving right back up and then painting another high here. You see how price moves up. We see another high being painted. Based on this candle here, we never got a close below it. We painted the high. We painted a closing higher low. We did not paint we painted the high by closing below the candle lows here. So it painted the high on a close. It did not fulfill my additional criteria of closing below the open of the green candle, but it did set both a closing high and a swing high. And the swing high is up here. We have now a higher low structure being built over here. And you'll see that we have the two red candles. We see the green candle closes above the high. It meets my additional criteria of closing above the open of the bear candle and kind of goes sideways. But it set the higher low here. And then it moved on from there. So this is where you have to practice this. I have additional criteria that some people don't have. Some people are going to view the structure a little bit more loosely. Some people are going to like the swing structure and only utilize the swing structure, especially GAN traders. But one of the reasons why I'm so stringent with the closing criteria and my additional criteria, because you'll see a lot of times indicators will throw closes and closing highs and lows where I would not consider them closing highs or lows, mainly because I have a lot of auction experience and I understand where the auction closes. That's where you're setting in stone on the record what is going on here. For those just joining the actual TA with Landy live stream Q&A by DeOrganized Spaces event, I'm going to open this space up for Q&A. But right now, we're all just watching the live stream. That is pinned to the top. So go ahead over and watch the live stream. You can mute the a tab or something with the actual Q&A. And if you do need to leave the space to go and watch the live stream, I'll announce on the live stream when I'm going to be taking questions. So just go ahead and jump right back in to this. If you want questions that you want to ask, I will repeat those questions on air and go from there. By answering them. Now, that's a little bit about trend. Support and resistance wise, we had some areas of interest. Last that we were talking about this particular structure for Bitcoin in this uptrend, I think we were, we were right here on the lows, right? So what we had done is we had defined some criteria, right? And that criteria was if we take out the highs, right? So we were right here on the 10th, I believe, right? That was our last stream. That was Tuesday.
Yeah. Yes. Yep.
Yeah. So we were mid candle here. And I had mentioned, there is some structures to pay attention to. Now, if we're gonna go with the lows, right? So we've got where we were trading right here, we've got a higher low structure here. We have a lower low swing. This lower low swing lines up with this right around. It was a front run of this structure over here on a closing basis, which was also a higher low at the time, and still remains a higher low, and to its wick low, which was right around the high side structure of this consolidation over here. So on the low side, we had some areas of interest. We had, kind of this area here, and I think I went and just kind of called out this area here because might as well take the highs here. And then we had, I believe, a red line here to kind of say like, hey, below here, which is also a higher low close and swing, then we're going to be testing this area that's pretty dangerous for bulls. And I think we just labeled this all red. Now I'm going to draw some boxes around this as well. To the upside, for where Bitcoin was trading, there's a high side structure here on a close open, and then there's that high at 99,860. And then we had just put in this high here at 101,175 and the 104. So realistically, we had some structures to pay attention to the upside here, right? And I'm just going to make these color coded for right now, and then I'm going to fill them in with boxes. We love box. Everybody loves boxes, right? And actually, we're going to make this yellow as well. So we've got kind of support and resistance, and I'm going through this fast, but again, all I'm doing is I'm looking at the structure. I'm creating some zones of interest right now, and I'm going to go through with the rectangle tool here. It's already pre-filled. In this case, we're going to do this as yellow, and we're going to do the stoplight zone thing that I typically show people. We've got kind of the yellow zones, the safe zones for pullbacks, right? We kind of talked about this a little bit. In my opinion, that wouldn't break structure. Too bad. Larger correction likely in store if we start going below certain areas. So, and even giving it, well, why didn't I mark the close open here? Because, well, the close open on this low, we're picking the wick because anywhere below the wick, it's kind of no man's land. And here you can always do the close open to the low and say, hey, anywhere between this close open low and the close open and the swing low, then we're looking to the red zone. You could do that. It's really tight zones. I don't care. It's personal preference. I prefer to use kind of this area down below as the zone of interest, because there is no direct closes and confluence with anything to the left, and this is just a consolidation structure, and I need to have some kind of criteria to define. So we're just going to go ahead and mark this area for support and resistance, and then we've got our line in the sand, or red line down here, which is $85,000. Anywhere below there, we can map out on longer term timeframes, how bad things could have gotten, but likely going in for a retest, of the mid to low 80s, possibly upper 70s to $80,000, right? So we talked a little bit about that. But now we've got our stoplight pattern. We've got red, yellow, green means go. Well, we saw the green means go side get hit and higher lows coming off of higher lows, and we had our criteria for expansion. So if we throw back on our bands here, which is what we like to use for our volatility metrics. Now we've talked about our actual trending structure. We talked about support and resistance. We've identified some areas of interest that we want to pay attention to on the daily. These areas, by the way, this could be a daily chart, and then you go ahead and you can have a completely different support and resistance chart for lower term timeframes as it relates to the daily. So in this case, we can see that we've gotten we had areas of interest to the upside here. Now this gets a little kind of crazy when you got bands on here as well, but if we were going to evaluate just the support and resistance in terms of trend, we have the highs that we marked, we have the higher lows that we marked in the more intermediate areas. Anywhere below there, kind of no man's land, all the way down to 88,713, which is a target. Top side of that zone, could it have stopped at $90,000? Sure, that is one area of interest you could mark. But realistically, anything below 90,500 or so here, it's this entire zone is fair game in terms of support and resistance down to this low end of the red zone. Well, what we saw was from where we were last Tuesday is Bitcoin came down and tested the higher low close open right here in this first zone between 90,682 or 95,682 and 93,500 to 600 on the low side, and it shows the upside. It came up and closed above this high side structure, right? We saw a close above the 99,000 and 99,860, and it closed right basically on the all-time high close, making a slightly higher high all-time high on Wednesday. And then it found support on the high that it just broke over here again, and then started to test the high side swings, right? So it tested and made a swing higher high, but we still needed to see $104,000 closed above. It continued to test this area before finally finding support within this zone on this prior close open high, even a little bit of back test in lower term timeframes. After testing with a really nasty doji candle that bears were probably really excited about, but it had regained the all-time high closing area and kept making new all-time highs on a close within the area of overhead resistance. So it was either going to hold up as resistance, or we were going to see Bitcoin move through. It moved through and began its expansive move to the upside in terms of support and resistance. Pretty easy to understand. I know that sometimes when I'm talking get a little complex. I hope everybody's keeping up, but in this case we saw all of our criteria met: close above the upper second, close above the all-time high, kick off expansion to the upside. So in theory, based on everything that I was just talking about, what do you think momentum is? Do you think momentum is up or down piece? This question is going to be for you because you're the only one I'm asking it to right now.
Well, to me, it appears that momentum is, well, I would expect it shows to the upside.
Okay.
You have a lot of candles going up, not a lot of movement going down.
Yeah, we had a little bit of choppiness before the move up, but one of the big things is so trend is up, right? We've broken through resistance and we are moving above resistance because we're moving up, and we're expanding volatility to the upside. So the first three make up the fourth, and they're all, in my opinion, equally weighted in terms of how we look for confluences, right? So trend, support and resistance, and volatility make momentum. So when we go to our momentum chart, we should see it pointed to the upside. And what do you know? It is pointed to the upside. And that, of course, for this particular momentum indicator is this is a regular Stoke. This is running a 6-3-14 255 look back for the already well-established TA nerds out there. For everybody else, don't worry about it. It's just a crypto optimized, and in my opinion, one of the just whole market optimized regular Stoke. This is measuring close over close price momentum, not the velocity of RSI for you Stoke RSI users. If you're already using RSI, you don't need a Stoke RSI. You can just look at the RSI. That's literally a momentum indicator. But in this case, we see closes are getting higher, especially the last two closes. But we had just a little bit of choppiness and sideways for the closes, and then they've gotten higher, which thus has turned our momentum back to the upside, along with trend being up and volatility expansion to the upside. So we do have a pivot actually for this, 103,500 for the momentum. That's just where is the confluence kind of thing. And in this case, basically, if we start seeing closes back below $104,000, probably going to see a momentum shift, because momentum will continue up with price coming down. So far, Bitcoin is up. It is finding a little bit of resistance around our kind of $2,000 incremental stuff between 106 and about 112, between 106 and 108, 108 to 110, 110 to 112. Again, take it 2K at this point in the lower term timeframes. That is always my advice, by the way, with an asset that moves like Bitcoin. That just comes with experience, by the way. There is other fibs that you can pull. There's other measurement tools that you can look at that are going to show that as well. So at least those intermediate areas of interest on lower term timeframes and stuff like that. I have not shown that kind of stuff to you guys yet, because I think that I want you to get all of what we've talked about in terms of trend, support and resistance, volatility and momentum down pat first, before we start using multiple time frames and hopping back and forth. We already kind of do that with the weekly and the daily, but if we're going to start going daily to the 12-hour to the 4-hour to the hourly and really start diving into it, I want you to understand what it is that we're talking about on this time frame first, before we start really getting deep into managing multiple time frames, because this isn't just for people who have experience with TA to kind of refresh and understand where I'm coming from with my technical analysis, but it's also for people who are brand new, or people who have a little bit of experience, maybe got to a certain point in technical analysis and said, yeah, I kind of understand it, but I understand the principles, but I don't know how to apply them, or maybe I need to just brush up and get really involved. So before I baffle everybody with that kind of stuff, might as well make sure you're good on the daily. And that does lead me to Peace. Do you have any questions for me based on what we're seeing right now?
So the Doji coin, that big, huge, volatile red candle.
Yeah.
Which actually, yes, I don't know if that's considered. It's a doji because it has wicks on both sides, right?
Yes. So this is a doji, and this is a perfect doji because we have just about equidistant high swing and low swings on this, and I'll even remove this so that you can see it a little bit clearer. Yeah. So, what are your questions about this one? Because this throws everybody off.
I know it throws me off because I'm not sure. Does it necessarily mean anything, or it's really only relative to what else is going around it? Like,
okay,
it's a huge spread, and what? Yeah,
it's a huge spread. So in fact, it's about a $12,000 spread, right?
It's nuts, right?
It's a great candle. I loved this day, by the way. It was a great volatile day.
I remember you mentioning it then.
Yeah, and we were looking for this too, by the way. At some point, we were looking for high volatility. Now, a few things. In terms of volatility, by the way, we were moving from expansion to compression. So I was not looking for this. If it closed above the upper second, I was looking for expansion. If it closed below the lower second and broke the lows, then I was looking for expansion of the downside into further downside supports, maybe more after. But it didn't do either of those things. So I was not really concerned with this candle. Many people were like, oh my God, it's over. Bull market's off. Let's all run for the hills, right? Everybody, you better be sitting in USDT and USDC. Get all your stables together. Oh my God.
And that would have been the worst time.
Right? Yeah. But in this case, it was overall in terms of structure, it was a big nothing burger. In fact, if we were to point out a few particulars about this candle and where it opened and where it closed, we had just seen a higher low closed, right? So if it had closed below this last higher low, I would have been, a little bit more bearish, going down and testing the lower second volatility level, maybe testing this low and breaking down for expansion. But it didn't close below this low. And in fact, it closed inside of the candle that set this higher low. So that was interesting, right? That's something to note about that day's auction. But in this case, what we had was, realistically, we had very clear criteria. If we were to break above the doji high, we're going to move higher. If we break below the doji low, we're going to move lower, right? And now it's a matter of defining the criteria, right? So we have a zone of interest between this close and the low, right? Which is basically where this close came in. So technically, we can move this over. This was a front run of this close. So this means that there was buy orders above this last closing low, which was also a higher low relative to, we had higher lows on the closes here, right? And still more higher lows on a close. And so we can define criteria. If we break below that low and lose this closing low, well, guess what? We're either testing down into this candle structure here, right? Between 90,682 and 91,929, basically $92,000, right? So we basically have a super easy setup, like the most stress-free setup you're going to get, in my opinion, for the way this played out, right? And then we had basically the overhead resistance of this close to now, because we don't know anything about this structure when this candle's coming in, but we have this closing high to the actual wick high there. So we had a much bigger zone to the upside of resistance, but very, very clear criteria to see on lower term timeframes, right? And we have basically the criteria of close above that high, we're moving higher, close below this low, we're going to probably test down into this low, possibly expand to the downside. So the typical thing is with dojis, even this doji right here, this is a doji followed by another doji. If we were to drop the low, we're going to paint a high, right? So we drop the low, we're going to paint that high, and we're going to move down towards this higher low, right? So that's for the doji to the bottom side. Doji to the top side, we close above this high, we're going to move and test this high over here, right? Because there's no other resistances above this. And you see that we got another doji, and guess what? We got a green candle doji, right? Not a big one, but close below the low here, we're going to paint the high, this high side structure. Close above this high here, we're going to go and move to this high, and guess what this doji did? Move to that high, and then we got a doji again. Close below this low, we're probably going to test this close open and this low. Be aware if it closes below this low, we're going to paint the high on a swing and a close, with this being the higher high. And close below the low, even here it would technically paint the high, but I'd need to see it close below the close open here and break down from the wicks. Otherwise, it's just going to go sideways in terms of the auction. Close above this high of this doji, we're going to move to this high over here. And exactly what we saw. We closed above this in lower term timeframes to go test this area, closed above this, and we've moved higher. So it's pretty easy when looking at candle structures to see and define what's what, and especially on dailies. It's very, very easy. I think a lot of people overcomplicate it by, not really paying attention to what's happening on the charts and more of what other people in like socials are saying. Right. And what is sentiment and what are the fundamentals that are going on behind the scenes? One of the crazy things is I get into arguments, and even with larger accounts here on X, I've gotten into plenty of arguments with people about like, no, it's all fundamental driven and this and that. Yes, it is. but you'll never hear about what's actually happening with some of these big buys or sells unless you're looking at the market. Well, if I were looking at the fundamentals, we're seeing who moved what to the exchanges, and it's like, yeah, but you're not going to know when they sell unless you're looking at the actual chart, which is live sentiment moment to moment. Like right now, this is live sentiment, right? We're getting pushback in the lower term timeframes from the high. So we have some live sentiment. We can even define the criteria for this structure here. So we can go through and get rid of all of this. And we can say, okay, if Bitcoin were going to put in a high today, what would that look like? Well, from today's candle, we would need to see, because this candle's still going, we'd need to see a close below 103.289. So basically 103.290. Warning on any closes, warning that this is going to be tested on any lower term time frame closes coming into the end of the day below the close open of the prior 2 days, right? Because the prior daily open that moved price up to our current daily open, if we start closing below there, we have to be aware that Bitcoin could set a high, right? So this any close below here, additional criteria for this high would be a close below 101,400, which would be the open of the prior candle. So we have areas of interest even on this daily and lower term timeframes. And then, what I'm going to show is how this kind of looks. This would set the high on the low side there, right? And then we need to see additional criteria of closing below here for a bigger move down, or a bigger correction in this case, after putting in the high. And if we were to look in lower term timeframes at, let's say, the hourly, we can see how price kind of played out, right? So we can see local structure. We can even define more things locally, right? If we start closing below this low right here, which is a nice higher low structure. So we've got this little bit of a swing downtrend and closing downtrend on the hourly, where we saw that low wick of the prior day's candle, right? We've got the close open of that candle here, and then we've got the day's candle open prior to that. So when looking at this particular structure here, even on the hourly, we've got higher low structure, and then we have some lower highs, or this is actually a higher high close, lower high swing, higher low, higher high. And then we're starting to see like a lower high come in. If we start to see closes below 105,500, we have to look left for the auction, because there's some confluence here on this close open high here and where this low came in. So if this area kind of breaks, we're looking for essentially we're looking for price to move down and test into this zone over here. Right. So if we lose this low wick and close, which is kind of where we've got our criteria set, even on lower term timeframes, and you can mark like this is a daily, this is a daily, and this is your lower term timeframe areas to pay attention to. And we can start to get our edge on where price is headed based on some of this criteria. We see resistance flip to support. We've seen it tested again. If this breaks down, then we've got a little bit of a high side structure to a swing high here at around 105,131 to 105,380. But realistically, we need to just pay attention to where we would set the daily high. Now, this criteria is going to change for tomorrow, right? So if we were just going to go and take all of this and just get it off of our chart here, and let's look at the daily, and we can play out. Let's say Bitcoin does not, where would Bitcoin get continuation? So based on yesterday's candle, it would be above the high there at 107,857. We'll close a high. We'd get continuation above 107,857. We'd actually close and paint a high for where today's candle, which is currently open, if it trades and closes below 103,289. Let's say it closes right where it is. Well, then tomorrow, the criteria for painting a high would be any close below today's low. And continuation would be any close above the high of today's candle, right? So then we start moving our criteria up. Then we look to the close open of the next candle, because that would be confirmation of closing that, not just the swing high and the closing high by closing below today's low. We have to pay attention to a further move down in a corrective phase below the open of the prior day's candle at 104,445. And of course, you can take the swing there, you can take the highs there, you can look to this high over here, whatever you want to do, right? Because the actual last closing high is over here. So maybe below this candle here, and we dip below this low, then we're going to test maybe back down to 102, 101, $100,000 where this high is coming in. So it's really just about looking at the historical auction, where things found, where bidders and where the bids and asks were. Because in the order book, you have a bid and an ask side. When you have a lot of sells come in, that is sellers hitting the bid. When you have a lot of buys coming in, that's buyers hitting the ask, or lifting the quote unquote offer, if you will, if you ever hear that for a lot of order book nerds. Does that language really matter? No. It just means that if price is moving down, there's more selling than buying. If price is moving up, there's more buying than selling. Not in terms of buy count or sell count, but in terms of buy size and sell size. So we're looking at a live auction. You can define this criteria very easily. And it's just a matter of making sure you understand why you're defining that criteria and what it is that you're going to be looking for in terms of zones of interest next. As to how you trade that, that's stuff that we're going to get into in further streams down the line, where you can utilize all the things that we're talking about to create a strategy for what it is that you want to see happen. And that means that you have an if then. If price does this, then I will do this, right? And that could be, if price breaks this area, then I will go long. If price breaks this area, then I will go short, right? Or if price hits this area of interest, I might go short, right? Then I go short. Or if price hits this area of interest, then I go long. So those could be counter trend, those could be in trend, whatever you'd like in terms of how you want to structure your risk. But this is how basically we will be moving from analyzing charts to creating trade setups based on what it is that we're analyzing. Does the doji here make sense?
Well, it makes sense now that, so what makes more sense to me now is the concept of closing the high or setting the high and closing the low, setting the low, which I know we went over all of that stuff, but I'm an old dog a little bit too, so it takes me a little while to kind of catch on. But yeah, I do understand like where to set the areas of interest or zones of interest and how that, it's all starting to come together a little bit more, I guess is the best way to put it.
Good. Because it's really just a matter of, in this case, understanding that if we were to close below the low, we're going lower, right? And then there's a common area of support to pay attention to, because we'd be closing below a big swing low that caught a lot of volume. And we'd also be breaking a structural area. Now, we'd need to see it close below that and the next low, but in the same thing to the upside. If we close above the high, this was a big high volume rejective area. We're going to move higher if we close above it. Anywhere in between is just noise, right? Because we're just trading inside of the wick to wick from the high to the low of that candle. So it's literally just, as long as it's staying inside, there's trades to be had in lower term timeframes, but there's nothing major happening in terms of price. It's just kind of going sideways for this entire structure. So when we see a higher low.
So when you see a big doji like that, you're looking for the top and the bottom are your
criteria.
Your criteria.
Where they line up with zones of interest. I can also figure out in between.
To you that it's a good time to kind of look at trading on the shorter term time frames until it actually hits
I'm not taking okay, so I took a swing long on the higher low structure here because what I saw when it hit support areas of interest, like it didn't break below this low. And when it didn't break below this low, I built a little bit of a swing long here. Now, of course, I hedged short on the other side when it hit up here, but that was only going to be, I was willing to let that position go even at a loss, just because it was a hedge. If this was going to range longer, I could trade it. If it was going to move above the high, then I'm killing it. So I killed it. I killed the short position above the high, kept my swing long position down here. Right? If price was going to move down, I would have made this a swing short and just traded the range in the lower term time frames. Right? Swing short to my swing long, balanced out. Maybe, you're arbing in between that range. That's a more complex strategy. Typically, most people are going to be directional, either long or short to start. But I bracketed the range, and then when price moved above the high, I automatically had the stop loss hit and take me out of that short position while keeping my long position. But in this case, like once I saw the higher low confirmed, I'm looking for the highs again and higher as the potential, because we got a higher low. So in between this candle, if we painted a lower high than this high over here, right? And this high that was right here, right? So we painted a high, but this was a higher high than this high over here. So we were in higher high structure, higher low structure on a close still. And you can identify that by switching from candles to a line chart. We have this higher low structure. We technically still had a higher low as it related to where the real higher low was right here. It does get a little goofy sometimes, but you have to use discernment in that case.
So, and a line chart traces the closes, the closes, not the swings.
Yeah. So that's what we're looking at there is closes, not the swings. And it kind of painted a little bit of a higher low, like right here instead of right here because of the green candle. But realistically, when you're looking at closing structure, this was the last real higher low on a close before we got this more recent one. This is just noise that went up to paint the higher high. If we had a lower high, I would have been more concerned about this low. We had a higher high that tested into this low side structure right here and found support. Once we saw that, I went long. I went long specifically from this red candle into this green candle in lower term timeframes on the daily. And I'll teach you how to do that, how to define that criteria, because once you have everything mapped out for what you're looking for in terms of trend, support, and resistance, volatility, momentum. Once you have everything kind of under control, where all the confluences are. I have a checklist for things I want to see, right? And I have a checklist for swing long and swing short. I have a checklist for scalp long and scalp short. What's the difference between the two? The difference between the two is one is a longer form trade. So I'm looking for holding this position typically longer than a day. For a scalp, that is usually going to be a day trade. Now, sometimes scalps can turn into longer form trades. For instance, I specifically built a swing position on the lows between all of these candles here because it was finding support around this higher low structure, right? And it was well above this low here that was coming into this higher low structure over here. So I was building on this higher low. I was even willing to build down here to this one, but cut it if it needed to go. But I built a higher low structure because of what I was seeing in lower term timeframes. And then I hedged and that was a swing. So that's a longer form trade. I'm using that trade's going to be open for typically more than a day. Should be if it's a swing trade. And what I did on the other side is I built a scalp, which was just an intraday trade here around this particular high side structure. And that could have turned into a swing trade, but it did not. I cut that one short and let it ride out to the top side. Now I did take multiple stabs at that particular scalp short, took very minimal losses, very tight stops, and I was well in profit from my swing trade on the higher low. So that's just a little bit of strategy behind that, but there's two setups. There's swing and there's scalp. And then there's swing long, swing short, scalp long, scalp short. So, and let's see. So why don't we go ahead here while we have some time And I see we've got like, at least on the DeOrganized stream, we've got like 157 people in there. I'm sure we've got people spread out because we're streaming everywhere. I see the Peace Love and the Bitcoin Live, DB Live, or Bitcoin Live account, and probably a few others like YouTube and so on and so forth. If anyone would like to come into the actual Spaces event that is running right now under the Landy account, I'm going to go ahead and if you can, let's just go ahead and repost that in the various chats. If that can be sent out to the various chats piece, if you can do that, jump into that Spaces event. GP, are you there?
I think so. I had to actually jump out for a little while. I'm jumping right back in there now. Because Kitty's art on Stack Space is also going on.
Oh, okay. Okay. Oh man. I feel bad now. I didn't realize she was doing a space at this time. All right. So I'm in the Spaces event right now. Let me go ahead and can I post that in here or no? Because I have to go to.
I've got it. I've got it.
Oh, okay. Thank you.
Yeah.
But that's being posted in the chats for everybody. The link to this Spaces event that's running, where if you have a question, you can jump into that Spaces event and you can ask me a question. Well, you can request, come up on stage. You can ask a question. I'll repeat it on the live stream here and then go through it. So we'll see how this goes. If anybody has any questions. GP, do you have any questions, bud? Are you good?
I'm also putting it on the QR code just because when we, and again, I think this eventually they'll get this straightened out, but we can't chat directly with the X live chat viewers, only all of the other platforms. So I've shared it out and I posted it, but people watching on X right now might have to use the QR code up at the top to get there.
All right, cool. Thanks, Peace. And thank you, GPSC. So I'm going to repeat what GPSC was asking me in the Spaces event here. He was asking about fibs and in particular, Fibonacci levels of interest. Like, am I using it for, because it's actually called a Fibonacci retracement tool. Am I using it for retracements or extensions? My answer is both. I use it for both retracements and extensions. So for instance, from this move, from the actual low side wick at $49,000 to the current highs, we can actually pull that and say like, okay, on a retracement, what are the areas of interest, right? And I can look at this and I use fibs in various ways, right? For this particular move up, not even from, we could take the structure change, right? From the swing higher low. So we had the first swing higher low come in at 52.5. Or we can take the low. Does it really matter? Depends on your criteria. That's why it is subjective, right? This is subjective on where you pull it. There are systems that are very stringent, like Elliott Wave, where you have to pull fibs in a certain way to maintain the system's integrity. But in this case, I don't give a shit. Excuse my language. I'm going to pull it based on what I want to see. And if I was just going to take the swing high to swing low, so today's swing high to the actual swing low, which would be like on the monthly, the last higher low on the monthly. So that's one of the reasons why I would take the $49,000 low and say, okay, what are the areas of interest on a retracement? Because we've got today's high at 108,388. We've got the low on the monthly is at the $49,000. Well, just like in Gann theory, the 50%, a 50% drop from 108 to basically a 50% drop would put us right back at around $73,000, which is right where we have the high in here. Anywhere below there, we're back inside of this higher low structure on the monthly, right? So that would not be good. So that's kind of the line in the sand, is the 50% retracement. Everybody that loves Gann, the Gann trading system, is now in love with me. They're like, oh, he said 50%. Woo! Below the 50%. We're going full Pizzino brothers. But yeah, this is they're very famous for their use of GAN. And in this case, that's valid, but there is no high in yet. So until we have a high, I'm not really concerned about this. At least I need to see at minimum a daily high set. So wherever the daily high comes in, then that's a valid one to pull. We don't have a daily high just yet. And in fact, the last daily high is the swing structure from that higher high doji that we were just talking about. So no matter what, we're technically looking at this move on an extension already. Could it come back in after swinging the 104 area? Yes. The last swing high to swing low from the more macro, if we were going to take the daily, has to be the criteria of looking at that 104, because we don't currently have a high. Once we get a high in the daily, then we can move this up and say like, okay, if this is the high, 618 would be the retracement around $80,000, right? And that's quite a big correction, but 618 is a fib level that we would have to pay attention to. But we see that the 786 is where we last had support, which is around $91,500. And that's right inside of this accumulation structure, right? So it's also lining up with the support and resistance flip here. So we had the resistance coming into that high at 93.5. And then we saw that area not get closed above at around that 91.5. Once we got closes above it, we moved to the 888 and then dumped back down to the 786. But this move is still live. If this was the high, this would be a fib level. These would be nice fib levels of confluence and interest. 99,178 to 91.5, anywhere below this low at 90,682, and we're right back in this structure here, looking at $90,000 and under, all the way down potentially to $80,000 at the 618. Now, if we wanted to pull, like, there's all kinds of fibs that you could pull, like fund with fibs. I should just do a fund with fibs because there's a million ways to pull them. But you have to look at specific systems like GAN. A lot of people like to only use very few fibs in GAN. A lot of people, like the Pizzino brothers, who are very famous for teaching GAN, only use the 1, the 0.5, and the 0. What? Because you have to have the 0 to 1, and they only use the 0.5 in the middle, which is basically 0 to 100% with the 50% in the middle. Anything below the 50% retracement is bearish, right? And they'll pull the structures for that. Often they'll sometimes use in GAN some extensions, but they're usually looking for confirmed highs. Where's the swing? Where's the next swing coming in? For extensions, I take the prior overall structure, right? So for extensions, we saw the 73,835 to $49,000, and then on the daily here above the one spot, I have my own personal preferences, because typically out of the box, you're going to see the 1272, the 1414, the 1618, the 1786, and then the 2 spot. For extensions, I have a few extra that I put in here. So I have the 1888. You'll see that I also use that on the main retracement. I've got the 1.168, which is 16.8% above the one spot here. Often confuse a lot of people, like, why is there a 1.618 here and a 1.618? This is a 168. I've back tested the ever loving crap out of that. It is essentially like this 12% up here. This is the 888 is essentially a 12%. It's 11.2%. And then on the bottom side, there's a 16.8%. I used to do the inverse and do like a 1.112, which would be the inverse of the 888, but it just backtesting didn't line up with too much on retracements for extensions. But anyway, that's way deep in the weeds on that for you GPSC. You can let me know. 786 is often level where reversals can be found. I disagree. It depends on how your fibs are pulled. Typically 618s to the upside and downside are areas of interest for reversals. And by the way, in a retracement structure, right? So we've got the high to the low. retracement structures, you're looking at the 382 is the inverse of the 618, right? So essentially, no matter which way you pull the fib, 382 will be a 618, 618 will be a 382. So they're basically 618 to 618 at this point, depending on if you're pulling it from the high to the low or the low to the high. And I'll demonstrate that right now. Go ahead, bud. It's wick to wick. Wick to wick. Can you pull it from candle body to candle? So he asked, what are my preferences? Kind of like, let's get into it. Like, do you pull from wick to wick or candle body to candle body is what GP was just asking me. And it's, you're going to pull swing to swing in most cases, but you want it to be confirmed swing to swing, which is one of the reasons why I won't pull from today's candle high, right? Could I? Sure. Some people do because the lower term time frame swings, but I'd be pulling from the last daily high on a swing. So swing to swing, and that was 104. In terms of which direction you're going to pull them, if I want to look for extensions to the downside, I'd pull the other way. So for like this prior structure, I could pull it bearishly by pulling from the swing low to the swing high if I think that the low is more likely to break down. And then invalidation is above the zero, right? For the upside, that'd be your invalidation. It's like, oh, this structure is invalidated. We're definitely not going lower. But I could get areas of interest and confluence by looking left. Now, you're going to see like people would call this a bull fib. Why would they call this a bull fib? Because the 618 would be the area that, and the 50% between the 618 and the 50% is where they'd want to see bounces and then a move back to the top side. I'm not going to get deep into that. I hate that whole like bull fib, bear fib, and this one's a bull fib, this one's a bear fib. Just look at it as percentages to the upside and downside for your retracements, and they're reversible no matter which way you pull the structure. The reason why I would pull this is if I was looking for extensions to the downside. So in my book, I'm really looking at this as a bearish fib, even though it's called a bull fib. Because we're and the reason why it's called a bull fib is because we're looking for retracements back to the upside, right? But in reality, I'm using it in a bearish way for breakdowns below 49K, right? That would be, but they're looking for retracements back to the upside because it is a retracement tool. So this would technically be a bull fib. And then the one that I'm showing or pulling that I'm using for this local structure is technically a bear fib, which is stupid to me. I understand why it is what it is, right? But it's a retracement, right? So we're looking for like, once we pull this, what are the areas of interest for retracement to the downside, right? And in this case, you know, anywhere below the zero spot and it's bearish. Anywhere to the upside is bullish on the extensions, right? So just use it as a percentage tool. Don't get too deep into the weeds. If you really want to get into fib theory and like, go watch Fibbo Swanee work his magic. Dude's really good. Too bad that he's never mind, I'm not going to get into politics, but he's a really good guy. He really understands his Fibonacci levels. He's a freaking wizard. If you really want to go and like dive so far deep into Fibonacci's that it'll make your head spin, that's the way to do it, is to look at like an actual master, and who is in my opinion, I don't like to use just fibs in the way that he does, but he uses fibs along with other technical analysis, obviously. But I have my system built out the way that I built it out for a reason, because it works and it's very highly accurate. And in fact, I have this is I know people like that are into TA are gonna be like, you're bullshitting. I have more than a 90% hit rate. So like I've honed my system in such a way that I have more than a 90% hit rate. And don't confuse hit rate with win rate. My win rate is very high as well. But, you know, in terms of success rate for areas of interest, get it very, very close to where we want to see things on a consistent basis because of how I'm defining the criteria. It's not magic. I'm not like some wizard. I've shown you all of the criteria that I define, and therefore you can derive why it's working, right? Go ahead. So Peace is asking a question.
Who is?
Peace. Or GP. What about further extensions? What do you mean about the further extension? So GP was saying that he's seen other people use fibs with further extensions. In which way, sir? Yeah, I mean, I could literally pull this fib and we could open this up and put negatives on this too and have downside extensions and just use one fib and have upside extensions and downside extensions. That is just way too much shit. Like, why bother? I'm going to put on the extensions that I like for retracements and the extension side of things. There's no sense in me going into the negative for it because it's just, then I'm using one fib and I've got all kinds of lines all over the place. I already have enough lines all over the place with support and resistance. The fibs are just there to give me confluence, right? I don't need all of this extra shit on my chart. I already have enough shit on my chart. So I want it to be clean. I just want to know where are the confluences. For instance, where are Fibonacci levels lining up with areas of interest for volatility right now? Because volatility is really what's governing things right now. Because you're going to get a bunch of people going, well, the high is going to come in here and it's going to go to $150,000 even. It's going to go to $200,000 even. Bullshit. No one knows that. You have to look at volatility on longer term time frames, see where that's at. Let's look at the monthly. Where is the monthly volatility level of interest? Well, it's starting to creep up to the 272, which is at $124,000, but it's not there yet. Maybe by the end of the month it will be. Where's the real level of interest? Well, we actually have to go and pull a bear market fib to actually understand how our levels of volatility, which is at $121,000 right now, which needs to be closed above to actually kick off true expansive posture on this particular structure. Oops, wrong thing. But if we were going to pull fibs, we're pulling the bear market fib for extensions because this is the last major structure, the last area of interest where we found support at, guess what, your 786. Yes, you're right. We hit a 786 on log scale. And now we're moving above, the 1272 at 103, 645. We have that upper third at $121,000 on the monthly. We're likely going to see that upper third run into that 1414. So we have confluence between a volatility level of interest likely coming in later this month with a fib level of interest. It doesn't have to be exact either, because as Bitcoin moves up towards that volatility level at the upper third, we'll see that adjust up intra-month. So if we continue to see Bitcoin close above, especially the upper second, which is here at 98,680, 690 or so. So basically 98,700. If we see Bitcoin close above there, and close above the 1272, we have criteria, right? We're looking to the next fib area and possibly wherever the upper third comes in, which is right now just below the 1414 on log scale here. Likely going to move up towards that or even maybe slightly above it in next month's close. Especially if Bitcoin is closing anywhere above the upper first, it's going to move up. Even if Bitcoin closes below the upper second, it's going to move up. We have the 20 simple, which is the basis band of the Bollinger Bands here, that will close and move up again. Coming into an area of interest at the 888 to the downside here, which is between the 786 and the one spot there, which is a fib level that I'm going to give my good friend 888 OG credit for, as he just really drilled it into my head that he loved this fib level, and it works very well. You can even see that the closing higher lows came in on there in the monthly. Yes, did it swing down to the 786? Sure did. Could it have gone down to the 618, by the way? Yeah, absolutely. In fact, that would have been right around the higher low here, and a retest of the actual monthly stab on the bottom side after the ETFs moved up to that 786 at about $50,000, $51,000. So still fair game down there. Lights out. If we were going to go back and test that 50% in the macro, boy, oh boy, that would have been nasty. Just draw all the way down to the 50%. People wanted that $30,000 to $32,000 level, by the way. But in this case, I'm not like, I don't need negative fibs on this, right? I don't need negative fib numbers. If I wanted to do sniper fibs, we're going to do the 6.6 to the 6.8. and that is going to be our sniper area to the upside and the downside. And it's like, go ahead and knock yourself out. You're not going to get any higher hit rate than me, just utilizing support and resistance. And you'll see that it'll have confluence no matter what. Like, you'll see people make sniper fibs all the time. Like, we got the 15-minute is like this, and if we go and we pull the last higher low to this it's like, well, this, if we were to pull this structure here, we can see that it hit the 618 to the 66 and the 68 or the 72 and like whatever. Really, dude, I know exactly the group that does that, right? Like, I know these people. Like, it's not, these people are not new to me. Does their system work? Yes. Does it consistently work any better than any other system? No, it's a selling point. If you were to look at this structure, yeah, go ahead. Order blocks and fair value gaps are something. Look, I don't care about fair value gaps. I care about order blocks. The whole fair value gap thing is always negotiable, right? There's plenty of indicators that you can get for fair value gaps. There's plenty of order block systems in place. But let's go ahead and look at the daily here. Order blocks are typically going to come in around swings or in between consolidations. Like, for instance, you could call this candle on the daily an order block. You can call the next bear candle an order block. You can call this whole area an order block, depending on what your time frame is. But in reality, you're going to get people calling, areas of volume where the order block lines up, and like, what is this? Is it the swing high? Is it the first candle or the second candle on the downside that is going to be your order block? That is your supply zone or your demand zone, and like all this other stuff. And look, you can be baffled by all that bullshit, but does it really matter when you're looking at the swing structure anyway? High swing, low swing, high close, low close. That's all that matters, because that's where your real supply and demand is. Order blocks in between don't matter. If you're going to be trading that low term time frame, you're going to be trading the trend as it relates to the higher term time frame anyway, and that should be where your bias is. If you're looking at trend, support, and resistance, like, a lot of people just want to find an edge for different trades, and like, I'm getting a 5 to 1 RR on this trade because I'm using sniper fibs with order blocks and I'm trading it back to the fair value gap. They'll be right a lot, but not any more right than you would be if you just keep it simple. If you adhere to the KISS theory, you're going to be a lot less stressed than trying to catch the 15-minute sniper fib. I think it's like a 6.6 to a 6.8. And it's funny because you just take the inverse of that, right? For the other side. So if you were to take the, I don't remember. It's like 6.6 to, I don't remember what they were using. It's probably the 0.66 to 6.8, I think, was their sniper fibs for a while. For those that understand what I'm talking about. For those that don't worry about it. To the 0.68. There's some that use like the 7 to the 7.2 or 7.02. That's another popular one, or the 6.8 to 7.02. And look, like, can you do that? And here, we'll just turn off all of the fib levels just because we want to look at this kind of stuff, because I want to just illustrate a point here. And that is that you don't need the extra shit on your chart, right? So we've got, and this would have been for this move. Sorry. So I pulled it the wrong, I pulled their sniper fib wrong. And realistically, this is where they would have wanted to get in, or it was around the 6.8 to 7.02 or whatever it is. And that's where I just don't care. Like, we're not trying to take, this is often a counter trading strategy. So yeah, so this is likely they're whatever sniper fibs, and there's different people who have different ethoses for the sniper fibs. Like, this shouldn't be on log scale, this should be on linear, and like, you're using log fibs, and it's like, doesn't matter when you're this low term time frame. It's like, you look at the adjustment there. Nada. Well, as you see, it caught the close. It's like, okay. And you'll see this kind of stuff all over the place. Realistically, what is this doing? This is just selling you a system. Does it work? Yeah, it's based on principles of support and resistance. Look freaking left. Like, you're going to see where the prior auction was. If we're swinging through it in the lower term timeframes, and you really are a scalper and you want to catch this stuff, maybe sniper fibs will help you. But they should only be used as an area of confluence. We've got a closing higher high and a closing high right here, right? So realistically, even on lower term timeframes, one, we've got a high over here, right? We've got a high here, and we've got, a close here, and we've got a close here for closing highs. You've literally got areas of interest around highs here that you can mark off and make your chart as ugly as you possibly can, and then call those zones of interest. And look at how it came up in even the minute chart and swung in this area, right? So expansion up into resistance, swing up into resistance, loses it, swings back up into resistance, finds a little support on one of the highs, and then swings above, comes right back down, finds it as resistance, dumps out, finds the next high as resistance, boom, retest, boom. Like, it's, you can define this stuff pretty easily. I mean, we can go to the hourly and we can see that this was an hourly candle high to a higher low to a higher high structure up here. But between those areas in the 15-minute, you had two highs right in here that were areas of interest, right? So there's a million different ways in which you can do this. But what it all comes down to is understanding trend, understanding support and resistance, understanding volatility, and then understanding momentum. Like, the 15-minute could potentially keep going to the downside here, but we have an expansive move to the upside and downside that could have, that's coming into a compression. Only if it breaks below the lower second and this last low are we getting continuation down. So it's literally break below the lower second, which is this close open, and drop this low, then we're looking further down. And there's another low right here that we have to pay attention to. And this would be like the line in the sand for the 15-minute. This just happens to be that 105,500. So that daily area of interest, right? So there's very clear criteria for continuation into an area of support, expansion into support. If it loses it, look to the next area. If it loses that, we're getting further expansion down. But this is expansion into compression, very likely going to see at minimum lower term time frame bounces. Remember, we're on a 15-minute. So when I say lower term time frame, I mean lower term than the 15-minute. But Peace is saying that we got to wrap up. He does have his daughter to pick up here. And we'll continue this next week, of course. And we will try to answer more and more questions. I actually like this. We'll see if we can get more people in, maybe do something a little bit different with bringing the space in a way in which, Peace, maybe we just bring them right in here. Let them ask questions in here. What do you think?
Maybe
think that's possible?
Bring an audience. Yeah, we can have up to 10 people in here.
Yeah, we can just rotate them out as they ask questions.
If we have more than 10 people that want to come in and ask questions, then we'll rotate them in. What did I do?
Yeah. Awesome. Well, Peace.
Yeah, I'm sorry. I wish I could just let it keep rolling because I love GPSC has great questions and he's got more experience in some of this stuff than I do, so he's asking better questions or maybe different questions than I have.
He's asking pretty complex questions for maybe some of the audience, but I think it gives me a chance to kind of reiterate that what we went through in the first 4 live streams and the breakdown of each domain of interest or the 4 keys to trade, technical analysis and trading, in my opinion, because you can't have one without the other. or you're just yellowing it, which is 99% of Solana. But look, Solana traders, I mean, not Solana itself, although maybe Solana is all yellow. I don't know. But in this case, trend, support and resistance, volatility and momentum, everything is based off of that, including fibs and systems and, whatever your preferred way of trading. It's all going to be based on that no matter what. So that's kind of where we're at, and we'll keep stressing this. And this gives me an opportunity to stress that, because I think a lot of people get broken by some of the systems that are out there because they are so complex that you feel like you need to know this. Like, these are really important things that we're missing out on. No, you're not missing out on anything, right? And I think that it helps clear up how those systems work too, when you understand how the fundamentals work. So I want to thank you, Peace. It's always a pleasure. I really appreciate you and the audience out there. And we'll try the Spaces thing again. We'll maybe see if maybe the Spaces, then we could filter you into the stream if you want to get on the stream, and then go from there. But Peace, as always, I want to thank you for hosting this.
We could actually share the link to join the live stream in the space too.
Okay, yeah.
Yeah, man, I love this. It's all experimental. It's great content. Landy, you're such a good dude in the space. I hope your loved ones are feeling better. I know you're got some sick people at home you're taking care of on top of helping us out. So much appreciated, brother. Be well, and everyone that participated in all the live viewers. GPSC obviously always coming in clutch, man. He's a beast. He's an absolute legend in our space. And I love the series. We'll keep doing it. And we'll just keep experimenting, and we'll just keep getting better and better as we figure out what works and what doesn't work.
Yeah. And after the live stream ends, I'll hang out in this space for a little bit while I'm doing some other things for anybody that wants to hang out with me. But Peace, you have a family member to go pick up, and I want to thank you. I'm going to go take care of some family members as well. As you mentioned, they're a little under the weather, and I'm pretending to be not under the weather. So hopefully if I pretend long enough, I won't actually catch it full degree.
I do the same thing. Sometimes you just get, it does work that way. I've had, sometimes it does work. If you just kind of
fake it till you make it.
Refuse to believe that you're sick. Sometimes the only time recently that didn't work for me was with COVID, where I ended up in the hospital for a week. That was bad, but otherwise, yeah, man, I hope you're doing well. Take care of yourself. Make sure you get some rest, and we'll talk soon.
All right, buddy. Take care of yourself. Peace. Thank you so much.
Thank you, Landy, so much. Thank you, everybody, for tuning in. I am Peace, Love Music. We are DeOrganized Media, coming at you live in partnership with Bitcoin Live Decentralized Broadcasting. And this was another great episode 6 of Learning TA with Landy. Thank you so much for tuning in. Y'all have a blessed day. And we'll see you tomorrow morning on the Good Morning Show. Peace out.